Trump pushes 5 massive credit score changes for 2025. I have seen a lot in my lifetime. Again, you guys know, been through bankruptcy, foreclosures, and today I'm a multimillionaire. And so I have leveraged credit in so many ways to help me gain a lot of assets. And I think that you should be doing the exact same thing. You don't have to risk your money. I say you can risk your credit instead of risking your money, because it's very easy to use money to fix your credit. Therefore, I'm going to share with you what these changes are so that you are prepared and you can take advantage of what's coming. Let's go.
Noelle. Yeah, she can fix that. You gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
Okay, so let's get right into it. So there are 5 massive changes that the Trump administration has decided that they wanted to do. And I am sitting back with my popcorn to see what they are. But in some cases, I have to get on my feet and start taking action. And so should you, because this affects everybody. Number 1, dismantling the CFPB. So many of you guys already know that Trump administration is not a big fan of oversight. They're not a big fan of regulation. And they want to dismantle all of these things that a lot of the more liberal side has put into place. And so the CFPB, Consumer Finance Protection Bureau, was created. I want to say Elizabeth Warren used to be over it. So it was kind of a very liberal type of organizational oversight bureau to help consumers. And so many of us actually have benefited from it, whether you're left, right, or anything in between. You probably have benefited in some ways, but there has been some overreach that some on the right really are not a fan of. So let's talk about what some of those changes are because of this dismantling. This is what's causing most of the changes that I am talking about. And again, some of them are super major. Buy here, pay here apps. So one of the major changes that are going to happen is you're going to start seeing, and you probably already have started seeing, way more buy here, pay here apps. Things like Klarna, things like Affirm, things like Afterpay, things like PayPal for Pay. So in other words, financing just normal items. And it's even gone so far where you can literally do this on DoorDash, where basically you can finance food, again, make payments on different things. You probably have walked into Walmart and they're offering you these things. And the big change is that these used to be just a soft inquiry. This was not actually a lending product, so it did not report on your credit. Well, now Equifax, TransUnion, Experian, the major credit bureaus are pushing that these are actual loan products and told these companies that they can get these reported on credit reports. This is going to be a major change because, again, it used to be a fintech. These were considered fintech companies. So Klarna, for example, Affirm, for example, they were not actually loan products. They had to say we are financial technology and we are not actually a loan product. So it was not actually a loan. So it did not actually report on your credit report. However, now that we have the dismantling of the CFPB, we are starting to see these apps and these companies everywhere trying to finance things in our lives. Well, now that's going to be a problem if it starts to report on your credit bureau, because it is going to lower so many people's score. Like I said, there are tons of people that would do these, go on Amazon, go on, Temu and all of these sites, and they would finance their clothes or, different things that they wanted to buy. And it was not affecting their credit report. Like I said, it would be a soft inquiry. It was not an actual hard inquiry on your credit report. And it did not report as a trade line on your credit report. Because again, it used to be 3 payments, 4 payments, 6 payments. Like these were really short-term loans. So I literally, it was an agreement that they shouldn't be on your credit report, because here's what I know about credit scores. Your credit scores gets lowered based on all of your new accounts. So one of the things that affects your credit score that you know is the age of your accounts and new accounts. Okay. So if you have all of these new accounts, well, guess what? That's going to lower your credit score. And many of us are already trying to keep our credit scores high and get them up. If you have a problem with your credit score, please use the link below and call my friends at Creative Credit Solutions. Okay. Tell them that Noelle Randall sent you. They will give you a free consultation. They do credit restoration. They can help you with your your credit score. They help me with my credit score. And it is really important to keep your credit score intact, especially if you want to get great business credit, lots of business loans, because you can just get great personal credit and leave it alone and then use your business credit and business funding for everything else. So I am a big proponent of just like having a good credit score and not really using it, okay? Using it's basically to get business credit and business funding. But if these companies are able to start putting these trade lines on your credit report and you start to fall into this, we're going to see credit scores starting to tank. That is the opposite of what Noelle Randall wants you to do. I'm telling you, keep a great personal credit score, build business credit, use your business credit. You can use your business credit for almost everything because you basically become a business. Again, if you want to watch a whole video on that, I have that. That's not what this video is about. But at the same time, you want to keep good personal credit and it is important to you. That is an asset for you. As I mentioned when this video started, you literally should risk your credit score when going out to do things, not your money. You can fix your bad credit with money. So use your credit to get you money. Keep the money. If anything happens with your credit, use the money to fix your credit. You get it. Let's keep going. Number 3, medical debt. Like I said, medical debt, there actually was paused. So the CFPB, like I said, that's being dismantled and is on pause right now, literally had put something in place where medical debt was not to be added to credit reports. And if you had medical debt on your credit report, you could use the CFPB to get it removed and to dispute it. Again, you still can do this. So if you need help getting medical debt off of your credit report, do it now, do it now, do it now. If you need help, call Creative Credit Solutions. Tell them Noelle Randall sent you. They will give you a free consultation. They may be able to help you get that medical debt off of your credit report and get your credit score increased. But right now, the Trump administration is saying that they are going to not uphold that. Again, they don't care anything about what the CFPB is doing. They want that whole bureau dismantled. They feel like it's just overreach, et cetera, et cetera. So many people, you already know, go into bankruptcy because of medical debt. I literally filed bankruptcy in 2008. And one of the reasons that pushed me over the edge is I had to have an emergency surgery. I had already lost my job. I had already been losing houses that I was flipping. And then when I had to have that emergency surgery with no health insurance, that was the final straw. And we just filed bankruptcy. So I know how important it is to be able to not have that medical debt and all of those medical debts on a credit report. I thought that was an amazing thing that the CFPB did. That's just Noelle telling you her opinion. So the fact that this is going to be halted and possibly go away, and then they actually do start putting medical debts back on credit reports, that's going to be an issue that is going to, again, lower people's credit score. So again, it's paused right now. So if you have medical debt, do something about it, dispute it, get it removed, use the CFPB while you still can to get that, because again, it is still active. There's all kind of litigation going on. Take advantage of this now. Do not wait. Medical debt on a credit report, I think, should not be allowed. But that's just my opinion. So act now. Number 4, Fannie Mae and Freddie Mac going to a Vantage score. So you may know that Fannie Mae and Freddie Mac are what we call government-sponsored entities. They are not the government. They actually are the secondary market that home loans are sold to. Okay, so they create a market for, you go to Bank of America, for example, you get a mortgage. Well, Fannie Mae and Freddie Mac will buy all of those mortgages from Bank of America, freeing up Bank of America to lend consumers more money. So they do not lend money directly to consumers. So many people really misunderstand Freddie Mac and Fannie Mae. As I've mentioned before, I have an MBA. I used to work in the mortgage business. In fact, I was a vice president at Chase Bank. So I totally understand the mortgage industry inside and out. And I think that Freddie Mac and Fannie Mae are really good things. But there are plenty of people who completely disagree, and the Trump administration might be one of them. So the Fannie Mae and Freddie Mac actually are kind of blamed for a part of the housing crisis. I don't necessarily blame them. I think it was more of the subprime stuff. But again, smart people will disagree. But the point is, Fannie Mae and Freddie Mac are kind of under attack, and they are a government-sponsored entity, so they have contracts that have to renew, and many people are speculating that the Trump administration will not be renewing those contracts. I'm not so sure about that, because again, the entire system has already been built, and it's a system that actually works really well. I think a smart person that knows about the economy, that's an economist, would really probably say, no, this actually is a great thing, because they create a secondary secondary market. It frees up banks to lend more monies to consumers, et cetera, et cetera. However, there needs to be consistency in how they work. And so one of the changes that is being introduced by the Trump administration is that they're going to be going to what's called the Vantage score 4.0. So you guys know that there's all different types of FICO scores, FICO 6, FICO 10, FICO this, and Vantage is actually one that most lenders do not use in any way, shape, or form. But the Vantage 4.0 is actually considered more of a lenient scoring model. So it actually has usually higher credit scores for people. So, a lot of times when you go into Credit Karma, for example, that's a Vantage score, you may show that you have like a 780, but then when you go somewhere else, they're like, girl, you do not have no 780, you got a 710, because the credit scores on the Vantage usually are much higher than what most lenders are actually using. So this could be a real advantage for consumers, I think, because it would show that you have a higher credit score. And then again, it will be consistently used across those. And so the banks themselves will start using those credit scoring models. And again, you would actually be able to qualify for more and have lower interest rates. So the higher your credit score, the lower the interest rate that you pay. So if, for example, you have a 680, yes, you may get qualified, but your credit score is going to be higher than someone that has a 740 credit score, for example. So if we're using a Vantage 4.0 scoring model and it has higher credit scores, then guess what? People would likely be paying lower interest rates for their mortgage. I see this as probably a good thing. We'll see how this goes. I will keep you posted. Number 5, Capital One and the Trump administration has proposed a cap on credit card interest rates. So these are two things kind of combined into one that I'm saying. The real change that the Trump administration has proposed is the credit interest rate cap. So again, right now we are seeing credit cards that have 30% interest, 29, 28%. Well, the Trump administration has proposed that there's a cap. Maybe it's 18%, maybe it's 21%. Again, I'm not as sure what the final number will end up being. But again, I see this actually as a good thing. Credit cards are all over the place with interest rates. A lot of times, I do think the CFPB, again, has done a very good job with changing some of the disclosures so that you do have to get disclosed. If they tell you 0% APR, it now has to give all of these disclosures that really explains it. So I do think the CFPB did a great job with credit cards to really start educating consumers so that you really understood how much money you were borrowing, how much it was costing you. Credit card statements started to change. And if you made the minimum payment, it told you how many years it was going to take. So the CFPB, I think, did a great job. Again, the Trump administration is dismantling and does not want the CFPB, but at the same time is offering this proposal to say, okay, let's cap the interest rate. So again, that would probably maybe balance some of it out. Again, I'm not really sure. But then at the same time, we also have Capital One and Discover trying to merge to become one big credit card company. I don't think if you have a credit card with Capital One or Discover, you're going to be impacted. However, obviously, it's easier to get a Capital One credit card than it is to get a Discover credit card. So we're going to see which one of these lending guidelines and kind of underwriting standards is taken, whether they kind of go with the Capital One model where there's like free credit cards for everybody, or if they kind of go with the Discover model where like, yeah, you can get it if you got great credit, and no, you ain't getting it if you don't got good credit. So we're going to see how this plays out. But these are major changes. And I have one last major change that I did not even see coming. And it happened like right before I made this video. So I could not share this with you. Taxation on stolen funds. This is crazy. And I'm not sure how they are going to allow this. So we already know there are tons of scammers out there calling, spoofing our phones. Like I said, my son got scammed. My daughter got scammed. My mom got scammed. I literally have gotten scammed. Like somebody came to my house and tricked me into getting some magazines. Like people nowadays are just out there doing things. But a lot of it is with spoofing, with these fake phone numbers and pretending to be the person. Okay. So let me share a crazy story with you. So literally my mom said she was driving in a car and a phone rings and it looks like it is her credit union. And they told her that her account was overdrawn or something crazy like that. And she needed to send them the money to fix it. Because it said the credit union, she just believed it. And she literally sent them the money. She laughs about it now. We're kicking ourselves, but it was like $1,500. This was major. And like I said, my son got scammed and it was nearly $2,000. So these are not small amounts, but guess what? it's getting even worse. There are people that literally have gotten scammed out of money out of their IRA, thinking it was the bank. There's this one news story where he lost over $200,000 out of his IRA. But guess what? An IRA is your income. So now the IRS is going to tax that money as income. So he got scammed out of that money. He believed that it was the bank or the bank telling him that he needed to do this. They scammed him, took over $200,000 out of his IRA, and now the IRS is charging him taxes on that money. And that is what they do. Like all of the money that you take out of your IRA, in many cases, it is taxable. So literally, you can be getting taxed on stolen money. So you really have to be careful because a lot of these scammers are targeting our retirement accounts. Our IRA is an individual retirement account. That's what IRA stands for. So now you got money stolen from the IRA. Then you got the IRS, the Internal Revenue Services, trying to take the rest of the money out of your IRA. It is a very, very sad situation, but it is what is happening. And so you really need to be aware. And this is not something that they have proposed to stop. They did not say that, you know what, if the money is stolen, the Trump administration is not saying, well, if the money was stolen from you, then you don't have to pay taxes on it. I think that's something they should propose, but it is not something that they have proposed. And right now, the way it stands is you would have to pay taxes on that stolen money. So we have a crazy situation right now where scammers are stealing money out of people's retirement accounts. They're stealing money out of people's bank accounts. And again, taxable money. And that when that money is stolen, then you are actually having to pay taxes on it. So you're losing even more. It's a sad situation. I need you to be aware of it. And this is all stuff that I think we can prepare for and make sure that we are vigilant so it doesn't happen to us. You're going to share this video with other people. You're going to tell people what I said in this video, and you yourself are going to make sure you are not a victim of any of these things. You are going to do what I said, and you are going to be A-OK. So if you have bad credit, remember, use that link in the description box to Creative Credit Solutions. Tell them that Noelle Randall sent you. They will give you a free consultation, maybe help you get your credit restored. Again, we have these massive changes. You can be prepared. I want to make sure that you have all of the knowledge, all of the resources, and all of the tools that you need to be successful. This is Noelle. To your success.